Hello, and a warm welcome to this week's video update on the markets. My name's Scott, and this is edition number 13 now of our weekly updates. 13 being an unlucky number for many cultures, and quite ironically, we are nearing all-time highs, if not hit them already today in the market. So just a little bit of irony there to start the presentation. But let's just go through what's happened over the last week and see what changes we've seen in the prices, because there's been quite a lot of movement in the market, so to speak. So as always, we'll start with the gas price. We can see really substantial gains in just a week period. So we've seen anywhere between a 14% to a 9% rise across the curve. If you look at that graph now, the graph is pretty much nearing all-time highs, which were set back in early March. And with the current momentum prices are at and what the prices are doing today, which I'm seeing, we could have perhaps hit that today. So definitely a shift in the dynamic in prices over the last 3 weeks or so, and continual upward pressure on prices. And mirroring that almost identically is power prices as well. That may well hit all-time highs sooner than gas. It's just a bit closer to hitting that peak set on the 8th of March, I believe. So the key events of last week, there's been a few, and I'm just going to pick out the top three. Number one is the political tensions over Nord Stream 1. So this is clearly becoming much more of a concern which the markets are pricing in, and it's just becoming a bit bigger concern for the international stage anyway. So political tensions are rising clearly between Russia and the West. At the moment, Nord Stream 1 is flowing at around 40% output, so a big reduction, and it is due to go into downtime anyway on the 11th of July for around 10 days. But there is growing kind of rumors and speculation that that will either be extended, or it won't come back online, or it won't come back online as promptly as scheduled. And all of this is just applying political pressure really on Germany, and from Russia's point of view, kind of making a statement there, you could say. But it may not be the case. It may go down for 10 days and then come back and resume at 100% capacity. But the market is definitely pricing that as a low likelihood outcome. Next is we have seen strike announcements in Norway. So Norway is a key supplier of oil and gas for the UK markets and European. The workforce there are due to go on strike today. So that was announced last week. And this just causes further disruption to the supply really. So an already very tight gas and oil market is not helped by the fact we're seeing strikes pop up, not just in Norway, but Australia, France as well. So it's the kind of period of strikes led on by rising inflation, you could argue, is definitely compounding issues further. And then finally, we have been noticing a trend in the LNG markets, in that Asian markets are putting pressure on European LNG hubs. So at the moment, Europe still does trade at a premium for the near curve anyway, but we've seen that trend change when you go past January of next year, where Asia is now paying more of a premium compared to Europe. So whether that's a signal that next year we'll see more LNG start to head Asia's way is to be seen. But it's obviously a worrying trend as Europe becomes more reliant on LNG if they see a reduction in shipments come as they are getting outcompeted by Asian markets. Moving forward to this week, we've got a few things which kind of lead on nicely from last week. So will the Norwegian strikes go ahead? Sadly, they did. So today, Tuesday that is, today they have gone ahead. It's taken around 13% of Norway's gas exports and 8% of its oil exports offline. This has had an impact on prices. Where it was already priced in, it wasn't priced in to 100% certainty. So now that the strikes have gone ahead, we have seen prices move up further. There's always, of course, the risk that further strikes could be on the horizon, particularly if the pay dispute is not agreed. So this is obviously an added concern which the market is going to have to factor in, as further disruption could be on the horizon near term. The saga of the free ports really is ongoing. So the US free port has been continually set back in terms of delays, and there could possibly be further delays in the restart of the facility. So a statement came out that an independent audit from the US hazardous materials safety team is required to survey the site. So that just adds another kind of obstacle and barrier in terms of getting this LNG port back online. So another bullish factor in prices. And then the next thing to look out for, which sounds nice for some but may pressure the markets more, is UK heat wave. So it's going to get warm this month. It's going to get warm towards the end of this week and into the next week. So temperatures certainly in the southern region as high as 30 degrees. While that means there'll be no heating requirements, it does put pressure on cooling requirements, air conditioning as such being quite a very energy intensive facility and infrastructure. So that could pressure demand up, if anything, during the heat wave, if it does outturn at very high temperatures for a number of days. So all three of these sadly are bullish drivers in the market, and all three of them are clearly pushing prices up further, along with the impact we saw last week on those key events as well. And that's why we've seen such strong momentum in the markets, rising at quite a rapid pace every day now. As always, there's more information available on our website, daily content. The latest monthly market update is uploaded now as well on there, so please feel free to check that out. And we do have our live market watch team as well, which you can contact between 10 and 12 Monday to Friday. So thank you very much for watching this quick update, and take care. I will see you at the next weekly update. Thank you.